Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, I'm going to do another video here focusing on the smaller cap names for MJ. We've got TGOD, HEXO, TRST, RIV, and here on TradingView I cannot do the CSE exchange stocks, so we got the US version of MedMen MMN FF, XLY, TBP, PYX. Looking at the longer term time frames, and then we're going to zoom in, and I am not focused on these fundamentals of these companies at all. Personally, I have everything I need to trade with the major names along with all the market volatility we've been seeing the past week. So I am not trading these smaller names. If you're interested in the fundamentals, this is not the place to look for them. We're just going to be looking at price action. So let's start it off with TGOD. The weekly time frame, we're looking for a higher low compared to 488. Obviously, comparative to most individual names, we are much weaker because of the size of the pullback we've seen and the lack of any momentum here heading into the first day of sales. We've got 2 more trading days to go. We are in a setup on some individual names where we can see some run up these next 2 days and potentially into Wednesday as well. But it's the names with the lack of resistance that you want to be looking at to probably see the most follow through. Obviously, we've got news relations as well. Anybody that comes out with news is going to have a different scenario. But names with a lot of resistance like TGOD here are not going to perform as well in a general sense of things. So we have a lot of resistance levels. Sure, we saw a solid green day on Friday, but compared to where we were back a couple weeks ago, it's a very significant different setup than what we have on a lot of other individual names. And just as a comparison, MMN FF is in breakout mode. So blue sky breakout versus a name like TGOD, it's a very clear choice on who you want to play bullish if you are a shorter term trader. You want to go with the momentum and the lack of resistance. So as far as TGOD is concerned, anything under 683 is a lower high on the daily time frame. So we're clearly in a downtrend on the daily chart, but the weekly chart is anticipated to form a higher low compared to 488. So the signal that our weekly higher low compared to that level has formed is going to be a trend change on the daily time frame. So in order to change this trend, unless we're going to see a straight break up through 683, which is still a long ways away, well over 10%, the odds favor that we're going to bounce and set a lower high compared to 683. From there, we're going to have to see a consolidation move to set a higher low and then break the lower highs and change that daily trend. And that change of the daily trend is going to mark the weekly higher low being set. And then due to the range that we have on the weekly, we will absolutely look for a weekly lower high to be set. And that is due to the amount of pullback we've seen from those all-time highs. HEXO weekly time frame, very healthy at this point. Huge bull run, increasing bull volume, all great signs. And now just sideways consolidation. We haven't even really started to pull back yet. So keep that in mind. Once we do see further consolidation, as this sector inevitably is going to see, again, we don't know when it's going to be. Maybe they can run through the fall. Maybe they can run through the winter. But just be aware that we are going to see multiple months of consolidation in this sector eventually. And when that does happen, there's a lot of space on some of these charts because of how fast we have run up. So the weekly most important support short term is 771. Bulls are in full control as long as that level holds from a longer term perspective. As far as the daily chart goes, you can see we're tightening up. And this is a nice equilibrium to be watching as well. Essentially, I'm watching 904 as a high. Then we came down and formed 771 as the low. A lower high formed at 880. And now the bulls are looking to form this higher low at 814. So the tight range as we head into Monday is the inside bar, and that's just 838 support and 859 resistance. Break 859 and we look to 880 actually. And if we break 838, we look down to 814. So this is the range that I'm watching to dictate momentum for the next couple of weeks. And if we see a bull break, we're going to be looking right back at the recent all-time high. And if we see a bear break, that leads the potential for further longer-term consolidation to be a potential. So HEXO, definitely one of the better setups from what we're looking at in all the names in the spaces, just in terms of proximity until we're back at all-time highs. We don't have a whole lot in terms of where we need to go. So we were looking at, CGC in the other video, and CGC right now is about 5%, or I should say 10% away from the all-time high. And we look here at 909, and the current price is at $8.49, so we need about 60 cents. So it's only about 6-7% here on HEXO. Anybody within 10% of their all-time high is looking really good because there are names that are much further away. TRST, all-time high. So obviously another one that is a lead bull candidate. Every single week for the last couple of months, it's a higher low. Whenever I see a pattern like that, candlestick after candlestick, at this point it's 3, 6, 9 candlesticks in a row, 8 candlesticks in a row. Whenever I see that, I say, all right, when that pattern changes, that's notable to me. So it's not going to happen next week unless we see a collapse, because 1182 is our higher low. So once we lose the weekly higher low pattern of every candlestick, that's going to tell me that some healthy consolidation is coming. As far as the daily chart goes, nice multiple day run in a row here, and anything above, let's see, we got support at 1182 and 1152. Anything above 1182 keeps the daily higher low pattern intact. We see a little bit of an upper wick from 1424, the all-time high. 1450 and 15 psychological resistances will be on watch. And whenever I see a wick like that, I want to ensure, is the hourly uptrend still intact? And at this point, it is. The most important short-term support is 1366. If we lose 1366, we're going to see more prolonged consolidation. But if we see the bulls show up first thing on Monday, 1402 and 1424 stand out to me as key resistance levels. This is still an extremely bullish chart as long as the hourly higher lows are maintained. And this is one of the names that does have a lot of bull momentum into Monday. Out of the major names, the most bull momentum right now is ACB because it just broke all resistance nearby and it's heading towards all-time highs. And in terms of these smaller names, again, the names like HEXO, trading sideways, they're in the middle of the road. They're definitely more bullish than a lot of other names, but there is certainly a higher tier of bullishness, and that's TRST is currently among them due to the positioning to blue sky breakouts. RIV is trying to finally get a bounce going. Essentially, it just needs to establish an all-time low, and right now we have a weekly inside bar. So the bulls want to break 612 this coming week to see a bull break, and it's a nice trading setup here. So the risk to reward is going to favor the bulls when we do get a break on some of these time frames to indicate the trend has changed. And I'm watching this hourly time frame, and it's still just a very clear lower high pattern. But if we can break 585, that's going to be the start of the bulls turning things around. And as far as the daily chart is concerned, we can see the low of 529, and then we had a lower low of 526, but no follow through. When you see a clear break of a support level and you do not get much follow through, you can take that as a bit of a bullish sign, almost like, I was going to say bullish divergence, but that means something else. But either way, what you want to be looking for now is the follow through to change the trend. So if we can break 612, that breaks the clear daily lower high pattern. 614 is right after that. And if you clear 612 and 614, there's some nice space to the upside as the upper $6 range is the next resistance after that. So it's clear the last 4 or 5 days we're trading in a base and we're seeing volume really low and really tight. Keep an eye on our RIV this week. This is definitely one to keep your eye on because, again, I know I just said, the names in Blue Sky Breakout are looking at the best scenario to be in, but when you have a name coming off the all-time low and it's low cap and there's low volume, once that momentum does shift, we are going to see a very easy 10+%. So keep an eye out for that shift for bull volume. Let's look at the hourly again. Bull volume shows a couple times here. It's really short-lived. So if we can see bull volume last a couple hourly candlesticks in a row, that will be notable. But keep an eye on this one because if we do shift that momentum and start to break those resistances of 585 and 614, we are going to be looking at the all-time low set and then the bulls trying to change that daily trend. And when we do bounce on the weekly chart, we're going to look for a weekly lower high to be set. But again, from where we currently stand, that could be 10 to 20% from where we do stand. So that's what we're watching for the coming week on RIV. Can the bulls prove themselves? So MedMen, another one with a significant bull move and in blue sky breakout territory. Volume on the weekly, very notable as well. The daily time frame, huge day to wrap up the week and a clear break of resistances. So we had some lower highs, blew through all those levels, and now we're looking at the hourly chart. So considering we have run so fast and so far, we have to be cautious again because there are no support levels established. And at this point, there is somebody out there who bought above $6 and they're down 5% in an hour. So chasing these names, you definitely have to be aware that you're playing with fire a little bit because it's a game of hot potato, a game of musical chairs, where when you're running this fast and hard, consolidation is coming. And the question is, can you get in and out and lock in your profit and continue that move on the way up? Or are you going to be the one holding the hot potato and the rug's going to get pulled out beneath you? And next thing you know, you're down 5% in an hour when everybody was bullish and excited and making a ton of money just an hour previously. So we are going to look to establish an hourly higher low here, but we're at the low of consolidation right now at the end of the day. So there's no indication that we're close to being done consolidating. We can see the kind of setup where we open higher on Monday if the Canadian MJ sector gets a bump, and that's a possibility because Bruce and CGC were on Mad Money at the end of the week, and we saw on Friday a pump after hours in CGC in response to that. I believe he mentioned a deal with a pharmaceutical. Actually, he didn't specify a pharmaceutical, but just another deal that has people stirring some rumors about what's the relationship with the. Anyways, I'm not getting into fundamentals into this video, but the bottom line is if the sector opens higher, MMN FF is going to benefit from that. But just be aware that the lack of support after 570, we're really looking down at 536. And again, that's a long way down before there is any clear support. As far as the 15-minute goes, you can get some more support levels. 528 and 532 stand out on the 15-minute time frame. XLY weekly chart has changed the trend with higher lows and higher highs, and we did get a bit of a bull break from an inside bar this past week, but the volume is not there to give an indication that that bull break volume or that bull break has follow through. So keep an eye on the volume. When you see a tightening range on declining volume break, you want to see that spike in volume associated with it, and we certainly did not see that. So a key support level on the weekly is 106, and we will be looking for a lower high compared to the recent high of 157. The question is the daily chart strong enough to continue? And it's possibly. We got a change in trend. We had our low, lower high, higher low, higher high. So there's the daily trend change. And now we're looking to just form another higher low compared to 108. Currently 116 is that support. It's ideal for the bulls if they can hold that level. And they need to see a break of 123 to see continuation. If we get this bull break of 123, this weekly chart's going to be looking a lot better to be heading up to look for an equilibrium and a lower high, perhaps somewhere in the 130s or 40s, if the bulls can continue this move. So key short-term support is 116, 123 is key short-term resistance, and after 123, 125 is right there. On these low cap names that move every penny, there's a lot of resistance levels. It's almost like every penny you get a support or resistance level. So it's a bit more tricky for technical analysis in that regard, just because it's almost like every price level is a level of resistance, but certainly able to utilize trends and see that the daily chart did recently shift. TBP, weekly chart needs to establish a higher low. 105 was that low, and we did break that level this week. So we're still clearly consolidating at this point. This is one that's going to be clear when the daily trend changes because these lower highs are so clear. So we're looking at the lower high of 142, 129, another one at 117. And if we can't break 117 here, it's a daily equilibrium. If we can break 117, we're going to be looking at a break of the lower highs. And to confirm the trend change after the break of the lower highs, you need the higher low and then the continuation move. So ideally, if I'm looking at this setup, I like things when things get really tight, and I like to play the break of the tightening ranges. So I would love to see a lower high compared to 117, pull back, form a higher low compared to 103, and then see that bull break. Because if we get the bull break from here, it's a bit more of a move. The bulls are going to be a bit more exhausted, and there's going to be a bit less follow through. Whereas if we set the lower high, get a higher low, and then break, it's almost like the bulls are as charged up as possible. That rubber band is pulled as tight as possible, and there's a lot more kinetic energy when that does snap. So we are now looking at the key resistance of 117, and we'll see if the bulls can break that level early this coming week. PYX, big time runner on the weekly time frame. Again, have to be very cautious here. Citron is bullish this one, which is interesting, as Citron is. I would love to have a conversation with Andrew Leff and be like, man, just what's the game plan with the sector here? It almost seems like they're just running around from one ticker to the next, kind of scrambling. Anyways, the weekly time frame, key resistance up here, we're looking at 52.43, and I need to look at the daily chart and say, is our uptrend still intact? And at this point, it still is. The most important support level is 35.04. This is the kind of setup where I absolutely anticipate an equilibrium, because from the high of the move to the low of the pullback, we pulled back a solid $17. We pulled back about 30+%. So when you have that much space between a range, the odds of an equilibrium are much more likely. So currently, if we lose the hourly uptrend, we're going to say that our daily lower high has been set, and we have a nice hourly equilibrium to be watching into Monday. And the tightness of that range, I would be looking at support. We haven't set a higher low just yet. It's 42.50 at the moment, but if we still keep pulling back, it's still in the equilibrium as far as I'm concerned. So 42.50 is the first level, but that's not the must hold. 39.55 is the must hold level. If we form another higher low compared to 39.55 and then make a bull move up, we'll say, all right, that's our new support level in the equilibrium. But we didn't get enough bullish follow through the last couple candlesticks here to indicate that the higher low had been established yet. Either way, my point is, once we lose the hourly higher low pattern, the daily chart will much more convincingly be setting its lower high and then pulling back, and then we'll look for another higher low compared to 35.04 and this equilibrium that we see play out everywhere time and time again. So I'd say the most likely scenario is a break of 42.50 and a higher low to form, but keeping in mind that pre-market and after hours, these prices can move wildly as it does not take as much volume to move the price. And here we are with extended hours on. We did drop down to 40.81. So it'll be interesting to see how Monday plays out, but I'm looking for a tightening daily range as the bottom line. And this is going to be another good one, because when the tight daily range breaks, that's when we get some significant move, and that's when the odds and the risk to reward are most in our favor. So I'm going to be watching towards the end of this week and potentially into next week, depending on how tight we get. But there will be a nice opportunity if we do see this range continue to tighten. So that's what we got on these names as we head into next week. Again, I'm not trading these names. There's definitely opportunity and volatility here, but I'm choosing different avenues to trade, and they're working for me and it's going well. So I'm going to stick with what continues to work, and best of luck to all the Canadian MJ names. Congrats to Canada yet again. Wednesday is going to be a fun day. And regardless of what the markets do from here, I'm looking forward to get past this date, because once this date is over, we can just take it for exactly what it is. There'll be some fundamental news every now and again. There'll be earnings, and then there'll be charts. And that's when it's most simple, just charts one day at a time. What's the trend telling us? And we'll see you soon.